This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Now, guys, we're going to do our monthly market update. This is the monthly market update for March 2025. I want to remind you that this is actually, most of this is February data. We haven't finished March yet, so when we talk about our March report, we're really using February data. Also, I focus on single-family homes because it's predominantly where I work. So when I'm doing my comparisons, I'm leaving it to single-family homes only. So let's take a look at what we got. Currently available, we have 5,643 single-family homes available. We have 2,464 under contract right now. And in the last 30 days, we sold just a little over 2,000. That gives us a current 2.79 months of inventory. That's our absorption rate, if you will, which is down from last month pretty significantly. Last month we had 3.5. That's mainly because of the sales. The sales are up, nearly 500 sales more than last month, which is that's a significant increase over what we've seen. Average days in the market's around 40, and the median price is $483.5, which is down like $1,000 from last month. Now, I know that they're talking about generally it's been $485. I've seen that in the paper. I've seen it, right, which is our peak. That's the highest we've ever had in terms of a median sale price for single-family homes in the Valley. So we're right there. We're hovering at that number right now. Last year at this time, we had only 3,800 available, and we had about the same number under contract, and about the same number sold, 1912. Then we only had 2 months worth of inventory, and our median price was $451. That's a year ago, last March.
What is a good or comfortable absorption rate?
It's interesting. There's an article recently that put out by one of the major information sources that said a balanced market is 5 to 6 months, and anything over 7 months is more of a buyer's market, and anything under 4 months is a seller's market. Not in Vegas,
right?
Not here.
It's been. You have to go back in the 90s, outside of the crash.
Here, I think. Well, I mean, you can bear me out on this, Rick. I think right now we're balanced. We're right about where we need to be. 3 months is about normal.
I would say 3 months is our number.
Is a balanced number. Anything less than that it becomes more of a seller's market. Anything significantly higher than that becomes more of a buyer's market in terms of absorption rate.
And I would think traditionally, with regards to more sales, we would typically see more sales picking up in the springtime.
Indeed. Yes, It is very seasonal, too.
And one of the things, too, when you look at the data, we are dead even with last year.
Yeah.
January, February last year, January, February this year, number of units closed.
Yeah, the volume's the same.
Units closed, we're within 100 properties.
Interesting.
The other thing I noticed with you're showing the median price is that price is actually well below the maximum FHA loan limit.
Which
makes
FHA's
things affordable.
And even conventional loans are 7
and a quarter now, or something like that.
I think it's even higher than that.
Yeah, it's even higher than that. So the numbers.
I think it's up into the 8. I have to look.
Is it? Okay. Wow. Okay.
It's pretty high.
Yep. Okay. Let's take a look. What else?
Conventional conforming.
Right.
Yeah.
So here's our number of closing. This is our little stack chart that shows you how many closings we've had every month, and this goes all the way back to the year 2000. And you can see we're pretty much on par with last year. We're doing about the same volume in terms of number of homes sold as to where we were last year. And last year was an off year. It was one of the slower years we've seen in the last 25.
So this is a colorful visual.
Yeah.
For people.
Charts on the radio.
Charts on the radio.
Charts on the radio.
They don't realize how pretty this is.
Well, you guys have to actually go to our website, and you can actually see these charts if you want to. I mean, we're describing them to you with vivid imagination. So,
now, did Rick have anything to do with putting this together?
Well, he has a lot. His name's right on top.
My name's on top.
Equity title. Equity helps me with all these charts.
I've got to say, Rick, that's a wonderful use of color.
Rick, the interesting thing to point out there too is you talk about this year, last year. Last year was the 6th worst market in
terms of volume.
In terms of transactions closed on that chart, going back all to 2000.
Yep.
So just getting us back to the 2018 level, would be amazing.
Yeah,
is when we start looking at getting momentum. And right now, we're starting off the year 2023 at right around 3,100 homes. 2024, right around 3,350. So not even a 10% increase there. And then this year, right at the same thing.
Same numbers.
Same numbers. So
I think we're going to see it pick up, though. I think we are going to see it pick up.
I think the second half of the year is going to be much better than these first 6 months.
I agree. I mean, we're guessing, but we both have seen some signals that things are going to start to pick up. Okay, so this is the median price. I like showing this chart because that line is very flat, guys. Now, it does go back to 2023. It was 424, 950 back then. But we've been at 485 the last 2 months, according to this chart. And we've been in the 480s, we've been there ever since like May of 24. We've been right in those high 470s, 480s. It hasn't moved much. The median price has been pretty flat. It's up a little bit. It's up a tiny bit, but not dramatic. And this is high rises. Now, I wanted to bring this up because it just look how it's shrinking over the last number of years.
Right.
The number of closings in high rises has shrunk pretty dramatically also, and I think that that inventory is not growing. They're not building more high rises right now. We're not seeing more capacity for that, and so we're seeing less turnover in the high rises.
I don't think there is any high rise being built right now.
No, I don't think there's anything in terms of there's no additional high rises being. Oh, that's not true. We got the one down in Henderson that Four Seasons is building, but that won't be ready for another couple of years anyway.
What do you make of this?
I think that there's been, I think when the pandemic started, high rises were not all that exciting a prospect because nobody wanted to get in an elevator. Honestly, I think that was an issue for them.
Right.
But they had a huge year in 2021, and I think people were moving from market to market at that point, and we saw that great shifting, the great transition, or whatever you want to call it. But ever since then, we've seen the numbers go down just because there's no additional inventory. They're not building more of them.
And a lot of the high rise, and I haven't done the numbers on this. I'm willing to bet a lot of them are second homes.
Yeah,
most of them. And now people are settled in. They're keeping them.
Yep.
They're not moving on from them, and they're either renting them.
I would tell you that the vast majority of the high rises down on and around the strip are never occupied by more than 20% at any given time, other than maybe the holidays or something like that, major events. And this is luxury sales. This is $1 million and over. And on this one, you can see we're a little bit ahead of last month on both of these. And last year was the best year ever for sales of $1 million or more. But Rick, you and I have talked about this. $1 million might not be luxury anymore.
No,
not in Vegas. I mean, you'd have to go to that bigger number.
There's a lot of tract communities that were sold at $600,000 that are now selling for $1 million.
Exactly right, because of that appreciation rate. And then this is with the $3 million and more. So this is really what I would call luxury now. And you've seen that numbers actually shot up. I mean, the numbers aren't that significant. They're not that big. But at this price point, we're up 5 more in February than we had last year. That's fairly significant considering the number that's there.
We're still seeing a lot of cash buyers coming in from California.
We are.
Lots
of cash buyers from California. And, and California's that's our feeder market, man. They're sending a lot of people
especially
over.
In this price range right here.
Yep. Now this is my line graph that I like to do every month, and in here you can see that the orange line is the number of homes sold, and that's still running. Maybe it's the better number than it's been since August of last year. We haven't hit 2,000 since then. The blue line is the median sale price. Again, that's pretty flat. It's going up a little bit. And the yellow line is the available homes. It shot up a little bit back in November, and it's come down now, starting to creep up a little bit again as we get into March. So what it tells me is that, again, the market's pretty balanced, guys. I'm not seeing it leaning any one way or another. The volume's down. We've got less sellers and less buyers, but it's still pretty balanced, don't you think?
I would agree. I think that this is probably the most balanced market we've seen in a long time.
And sustained balance. I mean, for a long period of time now, because the numbers aren't really changing dramatically over the last 6 months or so.
No. And you go back and look at interest rates. Interest rates haven't changed that much in the last 6 months,
Indeed.
right? They've probably finally been trading between like a half-point margin between where we are today.
Yeah.
Maybe, and we're on the lower side today, so maybe a little bit higher, but they've been pretty stable if you look at it over a year.
Yeah.
So, I mean, it's the whole market right now is, I think, we talked about the second half of the year we think is going to be much better, but we're also judging that on there's been too much stability, and we're not known for stability. So there's something that's going to happen, and everything points to more properties being sold.